This is the October 11 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include meteorologist Eric Snodgrass of Nutrien Ag Solutions. We'll ask him about the dry weather conditions here and his concerns for next season. We'll start with that, and then, of course, we'll transition to our Commodity Week discussions about the marketplace with Logan Kimmel today of Roach Ag Marketing out of Naperville, Illinois, and John Zanker. He's with Risk Management Commodities out of West Lafayette, Indiana. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world, online, on demand, anytime at willag.org. Let's begin today with Eric Snodgrass. I asked him about his concerns related to the dry weather this fall and the potential issues for next season.
Yeah, so we've got to get something to come through and disrupt the pattern. There's going to be a pretty, robust front early next week. So just starting there, we got our first frost event coming next week. So that's going to get down pretty far south in Illinois, probably to the central part of the state. So I think the coldest mornings, Monday, Tuesday morning, those will be the two colder ones next week, probably into Wednesday as well. What happens after that is we get really windy out of the south next week already. And this is the beginning to answering your question, because there's a trough coming into the west. We're going to open the Gulf back up, and there'll be a front that comes through at the end of next week, giving us our first chance of rain here in a long time. Then looking out farther into November, better chances are starting to show up in the longer term models. We're finally getting rid of this blocked up pattern and shoving stuff farther to the east, which means we have better chances of dipping into more cold air. We have better chances of getting precipitation. I think November comes in with a better chance of having average to above average precipitation for a big section of the Midwest. Now, you asked, what about next year? I need November to come in wet. I need December to come in wet as well. Because if we don't offset the soil moisture problem we have right now, it's going to be carried through winter into next spring, putting a tremendous amount of pressure on next spring's rains to come through and break that drought. Or we'll be in another situation that without just-in-time rains, we could be at the mercy of drought ruining our crop next year. So that's what happens when you have really dry falls. You make the following year more at risk for having, the issues of drought kind of lasting. Can La Nina help it out? Maybe. La Nina, you asked about winter. La Nina is our best chance. If we can get full, true La Nina kind of flow pattern coming through the United States this winter, the Ohio Valley has winter storms. So what we need, Todd, is a winter that we all hate so that we love next May. That's the plan going forward. If I could deliver you a terrible winter, you will like talking to me next May.
I will hold you to it and blame you too.
That's fine. Everybody else does, so I'm fine.
Let's now move from North America to South America. We need to talk about Mato Grosso and Goiás and whether it's raining there, and maybe about those ports along the Amazon, because they keep closing as it's related to low water levels.
Right. So October, November are the lowest that the Amazon gets every year. So that's partly normal, but it's really low this year, just like it was last year. The difference is that we've already begun to see the atmosphere make a shift toward a normal monsoonal kind of flow pattern. In fact, if you looked at some of the satellite data and rainfall data from just the last couple of days, it's looking monsoony, if that's even a word. It's looking like the monsoon's coming in. And all of the forecasts for the next 10 days are putting in enough rain for them to really aggressively plant. So yeah, the end of September, the first week of October, very slow in planting progress, especially in the center west region. But I think that's going to start to get kicked into high gear here. What we'll want to know, Todd, is at this point in November, are we 75% planted or 95% planted? And then and you ask about the longer range, if La Nina has its way, the center west region tends to stay too wet into January and February, meaning that the crop stays greener longer. In addition to that, we don't have the opportunities to harvest it very quickly, which means we could start to see disruptions in the crop calendar if it's too wet in the center west growing areas after the monsoon does get going. But right now, I don't know that that's enough to scare the markets in a direction that is favorable for us. So we're just going to have to sit and wait and see.
Oh, I was getting bullish corn until you said that, son of a gun.
Please don't.
Okay, we won't. We will, but we won't. All right. Thank you, Eric. I appreciate it.
Yeah, you bet.
Eric Snodgrass is with Nutrient Ag Solutions, joined us on our Friday edition of the Closing Market Report. It came to you from Illinois Public Media, online at willag.org, willag.org. I'm University of Illinois Extension's Todd Gleason. Now let's turn our attention to our Commodity Week panelists. We'll begin with John Zanker. He is at Risk Management Commodities out of West Lafayette, Indiana. John Zanker from RMC. I'd like to start with the season's average cash price for each of the commodities. USDA did not change them. They're $5.70 for wheat, $4.10 for corn, and $10.80 for soybeans. I have to admit that when I look at that last price, the $10.80, I wonder about it, mostly because both FAPRI, or the Food Agricultural Policy Research Institute at the University of Missouri, and the farmdoc team are below that number pretty substantially. I want to say 1020, but I don't recall them off the top of my head. Still, they're both, I know, below this 1080 mark. Can we get to that point where we have a 1080 cash price for soybeans? And have farmers been really good about marketing? Did they do a lot of marketing when it was above $11 at some point?
Well, the elevators processors would tell you that there wasn't a substantial amount of soybeans forward priced when we had a 12 in front of them or even 11 in front of them. So, but I think the USDA still uses those numbers to some extent, maybe 25% or something, that we had a chance to get priced above 11 into the $12.
So I do wonder, John, because I know USDA has a formula and you can find it. It's easily enough. It's the season's average cash price, comma, USDA. If you do a Google search, and it's just a sheet, you can see what it looks like. And so you can see what they look back and think, well, what's the normal numbers that go across the scale, and when do they sell, and when do those show up? And you're telling me that's what they're doing at this point still, and at 1080, and that in the future things are likely to change?
I would think so. Just looking at this number, I find it hard to believe that the USDA would think that we'll average 1080 from this point forward. This 550 million carryout would suggest that maybe we're 50 cents to $1 overpriced at this point. But as we've seen the last several seasons, last several years, there's a scare in South America, and we're currently seeing one, and that's the reason that we've bounced as far as we have off the lows. We've certainly lost some yield potential here. I would say we've lost 2 bushels from August 15th. And that on 86 million harvested acres, that's a substantial number of soybeans. So part of the rally is due to that, and then again, part of the a big portion of the rally is it's just not been raining in Mato Grosso and Guayas, and they account for about 45% of Brazil's soybean production.
Yeah, so part of that is about the planting season, and then it's easy to get these two things mixed up, but there is a drought in Brazil. It's much, I think, like saying there's a drought, this part of it anyway, saying there is a drought in New Orleans, because there is a drought in Brazil. I read this morning, in fact, that the Cargill and the Louis Dreyfus facilities, or maybe it was the Bunge facility, I don't remember which one, won't be shipping again on the Amazon River. It's a tributary, I believe, because they're just too low, and they're unlikely to ship again until November. So they're thinking that the rainfall will come. And that's a separate issue, relatively speaking, to what's happening in Mato Grosso and Goiás, that 45% of total production. But it is something we have to keep a track of. When those, and if that rally does come, where do you think producers ought to think about marketing soybeans?
Well, if we can bounce off of today's lows and start to see the harvest will certainly be winding down next week from the pace that we're seeing this week. It's just a furious pace as we try to get these beans in before the moisture levels fall to 7 or 8%. So we'll start to see less hedging pressure next week. And I don't think we've seen a lot of hedging pressure this week. I think most of the soybeans that were going across the scales out of the field had been forward priced. So I don't think there's been a lot of pressure there, but I think the rain potential increasing in the Gaius and Mato Grosso has certainly had an impact. So I would think that I've been 100% hedged in one form or the other for a couple months, and I wouldn't back away from that. I think that here we stand at a 550 projected carryout, and probably not going to see much of a reduction in the yield from here. I think if Brazil and Argentina have a good crop, and currently the projection for Brazil is 165 to 170 million tons, that's versus 153 this year. The downside potential is pretty stout, and we know that China continues to struggle economically. We'll learn a lot here in the next 5 or 6 weeks. These will be the biggest weeks of the marketing year for soybean shipments. And if we stumble and don't make up some ground to expectations, we're going to have a 9 in front of soybeans. We just, we're going to struggle to figure out whether it's going to be 9.25 or 9.75. And probably the most supportive thing for soybeans right now is the price of corn going forward.
Well, tell me about that. USDA made some changes. Part of them came from the grain stocks number, lowered that 52 million for the beginning stocks for this current year, and found another 8 million bushels that they set aside somewhere. So our ending stocks by the time we get to next fall is now below 2 billion. It's 1.999 billion bushels, still a $4.10 season's average cash price there. What were the things that you found of most interest out of that supply and demand table?
Well, I've been really impressed with export demand here in the last 2 months, 3 months. That's typically been a period where we start to fall off. Brazil's second crop corn is their biggest crop, and most of that's exported. So they were deep into our pockets well into fall last year. And, instead of seeing export shipment numbers in the 20s and the 30 millions, we're seeing, 40, 45, 48. We've had some really good weeks here in the last 2 months. And then, as with soybeans, in the last 2 weeks of August and first week of September, we pulled this corn yield down. I think at least 3 million bushels, 3 bushels to the acre. So on 82.7 harvested, there's 250 million bushels of corn. So we were a little bit worried, or I was certainly worried a couple months ago, about a corn yield pushing into the high 180s. And having a carry out of 2.3, 2.4. So I think the combination of better than expected export demand and just pulling that yield down, I think we're in a much better position going forward. I was worried about maybe seeing 350 December corn futures, and we bottomed out at 385, and the rain stopped, and here we are. So we're going to get really slammed with corn harvest here in the next 3 weeks. And, there's the basis has collapsed. The spreads are wide. We need some rain along the Mississippi to get the barges moving again. So we have the potential to pull corn prices down 20 to 30 cents potentially in the next 3 weeks. But going forward, I like where we're at. I think that the late planting of soybeans in Mato Grosso in particular will lead to the late planting of the second crop, safrinha crop, and that has a major impact potentially on corn yield down there.
Yeah, to be clear, you're at odds with USDA on what the yield and total production is for corn then, because USDA, of course, raising the yield 0.2 bushels this time around to 183.8, and total production up about 17 million bushels. How far down do you think the corn yield is going to go by the time we get to the January ending numbers for the year?
Oh no, I maybe I'm said something that confused you, but no, I was talking about where the corn yield could have gone had we had good rain.
Oh,
up
okay.
up into the upper 180s. Yeah, up into the upper 180s. But no, I think that I'm not surprised at all by the 183.8. I'm not surprised that it went up. I wouldn't have been surprised if it went down a little bit. These corn yields are just spectacular, as you well know. And Iowa, Illinois, Indiana, just some spectacular numbers, new records. There's some disappointments along the way, and part of that was due to lack of rainfall. Quite a bit of it's been due to tar spot. And the difference between unsprayed fields and sprayed fields, sometimes in excess, it appears in excess of 50 bushels to the acre.
Okay, so what should producers do with both corn and soybeans at this point? How do you tell them to go about marketing their crop?
Well, I would not be afraid to push soybean sales to the 75 or 80% mark, with the idea that we'll hold 20% to see if we do have a problem in South America, which has become more common than not, versus the olden days where we'd go several years without a scare down there. Now that unpriced 20%, 25%. I'd have protected with an option strategy, a put option strategy. We have to draw a line in the sand. Price wise, we were fortunate with that we turned dry and that we've been dry in South America. But if it starts to rain and we see good amounts fall in Gaius and Mato Grosso, that we've pretty much lost our bean support. And again, I'm a little bit worried that our bean shipment numbers are going to come up short here in the next 6 weeks. We're currently about 136 million behind where we need to be pace-wise to make the USDA's current export projection of 1.85 billion. So there's some serious downside potential here still, I believe, in beans. And Todd, so we just need to get a floor set and look at getting some of next year's crop on the books as well. For corn, again, we've used this bounce, the surprisingly good bounce, to get some extra sales on. We were in the same boat with most of the farmers around the country. We certainly did not have as much on the books as we should have had on the books or wanted to have on the books by the 15th of August, but we've got a second chance here. We've taken advantage of that, but I think that, we need to push things along. Now, unlike soybeans, I don't think the downside potential is excessive in corn due to demand. And we don't have to worry about the South Americans as far as demand here in the next 3 to 4 months. So I think that, if you want to set some floors, minimum price contracts would probably be a good idea. I would avoid putting corn on basis contracts at the elevator, DP. There were some nightmares with those in August this year, and I don't want to see producers have to go through that again.
John Zanker is with Risk Management Commodities. He's out of West Lafayette, Indiana. Logan Kimmel is with Roach Ag Marketing. He's in Naperville and now joins us. Hi, Logan. Thank you for taking some time with us today. First, what were your thoughts just after the report and when you saw not so many changes taking place?
Yeah, largely kind of an unexciting report here today. You saw the yields pretty well come in line with what the trade was guessing. A little bit of an uptick in the corn. I'd say the one thing, that kind of stuck out to me, maybe that could be a little bearish on the market, was some of the wheat numbers on the world carryouts. Not really seeing the cut that the trade was guessing. So that possibly is weighing on the wheat futures here today. But overall, in regards to the corn and beans, I think what we've confirmed is there are some pretty big crops out there. And I think the trade was pretty well in line with that heading into this report. So overall, I think we've seen that the USDA is pegging the yields fairly high here, and I think that will stand through harvest.
Do you see a post-harvest bounce other than what we've had going into the harvest at this point?
Yeah, I think that as we've come into a heavy part of harvest, now that we have this USDA report behind us, I think what the market is going to focus now quickly on shifting to is still South American weather, if they get rain and how much. And then I do believe that there are some issues or concerns in the Black Sea region too, with dryness, as well as like Russia and Ukraine acreage numbers. So, yeah, I think there's still going to be opportunities, and that I believe now with the USDA numbers behind us, this is what the market's going to shift to. Probably first and foremost is the South American rains here potentially in the next 5 to 10 days. So as you look into the bean market, and even more in the corn too, if you catch volatility and upswings here through the latter part of harvest or into the winter, I think producers need to look at still using rallies as marketing opportunities. Given the carry-out numbers here from today, I think that those opportunities going forward is good spots for folks then to look at what they have harvested, what they need to market, and use South American weather and Black Sea region dryness to do so.
Yeah, so are you thinking that it's more likely there'll be a $9 cash price or a $10 cash price going forward?
The concern with the soybeans is where the stocks to use ratio is. Historically, that would be associated with, back into the 2014, 2019 levels of prices where we did see sub $10 futures prices. That's something to keep in the back of our minds here on the bean market with the 550 carryouts. If you look at where the cash price is and even the board here today, these prices could look good down the road if South America doesn't have more of a weather issue than they've had here at the very beginning stages of their crop. So I think that, yes, be mindful of historically with the stocks to use where it's at and the carry out. You generally see beans more closer in the $9 range historically. That can obviously change. We've got a lot of outside macro events this year, including the election coming up. So I think it's going to be volatile, but with where the USDA has the carry out currently, stocks to use with what we know now in our crop size, these could end up being good prices here down the road on soybeans.
Where do exports to China stand today, or exports in general, and how do you think a late planted soybean crop in South America may or may not affect that through January and maybe the beginning of February?
Yeah, I think if we do see this later planted window continue to get pushed back, you would want to see that export business start piling in here to us on the soybeans from China in this window between now and the beginning of the year. So yeah, we're in that window where if that is continued dryness and later planted in South America, Brazil, we would need to see or want to see China step up their purchases from us here on soybeans and corn.
Do you think that they will, and will they reach a pace that you can meet the USDA's total export number for the marketing year?
You'd want to see some bigger purchases start to come through here very in short order on the soybeans. I think if you look at the corn, though, it would seem that the export business and the demand side is a little bit better of a situation, maybe so, because the prices come down here. So we really need to start to see the soybean numbers pick up here. I think the corn situation on the export side is looking a little bit better. But this is the window we want to see that happen in, where our time is, where our business is coming in this window between now and the end of the year.
Can you talk about some of the fundamentals of consumption for both corn and soybeans, whether it be crush in the United States for soybean or domestic demand for feed, maybe even ethanol for corn?
Well, I think the uptick in the export on the corn number here today is a sign of hope. And I also would maybe expect to see that in the ethanol numbers as well. So I guess when you look at the fundamentals here domestically, yes, we have big crops, but I think you're starting to see this corn demand story not as burdensome as maybe it was a couple months ago. And I would still hold a little concern on the soybean fundamentals, though, just with our carry out here and globally. It's probably not in as good of a position as the corn market. So there are a few bright spots here in corn with the exports and the ethanol. And I think that should hold up here through the end of this year.
And then finally, let's talk about what marketing plans should look like for both of these commodities. Can you walk me through corn first, and then we'll come back to soybean?
I think as producers are in the fields harvesting here, the short-term market rallies and opportunities that if we can see that in the new crop corn and beans need to be taken advantage of, and rallies are meant to be marketed upon. If you're in a position where you have to weigh your options on storage, talk to your merchandiser, see what they can offer. If you need to come in and replace immediate sales with call options, I think that's a reasonable marketing plan. But for right now, the numbers that we know here from today's USDA report, I think rallies in the corn and bean futures prices are good marketing opportunities through harvest here. As we get further along into this winter and potentially further along into the South America growing season, weather events going forward, that could still provide opportunities then at that point for folks to consider looking at 2025 and next year's crop too, as we see volatility in the soybeans continuing to pick up. But something to keep in the back of our minds here as producers is what can we start looking at for next year's production as well on new crop.
Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world, online on demand anytime you'd like at willag.org. Our thanks go to our panelists today, including Logan Kimmel and John Zanker. I'm University of Illinois Extension's Todd Gleason.
From the Illinois State Water Survey at the University of Illinois Prairie Research Institute, this is Illinois State climatologist Trent Ford. October has taken over where September left off, with warm days and cool nights. Average temperatures over the past week range from the high 50s in northern Illinois to the mid 60s in southern Illinois, between 1 and 4 degrees above normal. The dryness of the air has been particularly remarkable, with afternoon relative humidity regularly dipping into the teens and low 20s. While the extremely dry air has been comfortable, it has also added to the lack of precipitation to increase the risk of field fires and blowing dust. Speaking of that precipitation, most of the state remained completely dry this week, with only the western portions picking up around half an inch or so. The remnants of Hurricane Helene brought our last shot of real rain and kept southern Illinois above average on precipitation over the last 30 days. But most areas north of Interstate 70 have been 1 to 4 inches drier than normal since mid-September. That same hurricane seriously bumped up flow on the lower Mississippi River. However, a recent dryness has quickly brought it back down. At today's point, the Mississippi at Memphis is forecasted to drop back below low threshold over the weekend. On the bright side, the weather has been great for harvest as long as folks are able to take precautions for the fire and dust. Looking ahead, our warmer temperatures will peak on Saturday, with some places approaching highs around 90. A relatively dry cold front moves through this weekend and sends temperatures into real fall territory. Highs next week will struggle to get above 60, and low temperatures will regularly dip into the mid to low 30s. It's likely much of the state will see some frost next week, which is a little later than usual for northern Illinois, but pretty much right on schedule for central Illinois. While our temperatures will change next week, we'll still remain in a very dry pattern. Most of Illinois is forecast to pick up less than a tenth of an inch next week. The cooler weather may not last long, though, as the week 2 outlooks for late October show best chances of above average temperatures and also begin to sneak some better chances of above average precipitation into the Midwest as we get closer to the end of the month. For now, though, mild and dry weather will keep harvests going strong across Illinois. This is Illinois State Climatologist Trent Ford, wishing everyone a happy, healthy weekend.